Imagine trying to understand a family's true financial health by only looking at the cash in their wallet today. You would miss the value of their house, the car they are still paying for, and the money they will receive next month. For a long time, this is how many governments, including Pakistan's, managed their finances. This is called cash-based accounting. It is a simple method, but it does not show the full picture. It only records money when it is actually received or spent. This old system makes it very difficult to see long-term responsibilities or the real value of what the public owns, leaving many questions unanswered about the nation's true financial standing and future obligations. Now let's talk about a better way. This better way is called accrual accounting, and its rulebook for the public sector is the International Public Sector Accounting Standards, or Ipsas. Specifically, Ipsas 1, which is titled Presentation of Financial Statements, is the foundational standard. It is like the main chapter in a new, much clearer instruction manual for government accountants. Its primary purpose is to ensure that the financial reports prepared by public sector bodies are comprehensive, understandable, and consistent. This standard demands a complete set of financial statements that tell the whole story, not just a small part of it. It changes the game completely. Ipsas 1 requires governments to present a full set of financial reports every year. This is not just a simple list of cash in and cash out. It includes a statement of financial position, which is like a snapshot of everything the government owns and owes at a specific point in time. It also includes a statement of financial performance, showing if the government's operations resulted in a surplus or a deficit over the year. Furthermore, it requires a cash flow statement and detailed notes that explain the numbers. This complete package provides a 360-degree view of public finances, making it possible for citizens and leaders alike to truly grasp the economic situation. The importance of this shift cannot be overstated. By moving to Ipsas 1, a country commits to a global benchmark of quality and transparency in financial reporting. It allows for better comparisons, not just between different departments within the country, but also with other nations around the world. When everyone follows the same set of high-quality rules, it becomes much easier to assess performance, identify risks, and make smarter decisions about how to use taxpayer money. It is a fundamental step towards modernizing how the government manages the resources entrusted to it by the people, building a foundation of clarity and accountability for all to see. For many years, Pakistan's public sector operated on a cash-based accounting system. This traditional method was familiar and seemed straightforward, but it had significant drawbacks that became more apparent over time. Under this system, major government assets like roads, dams, and public buildings were not properly recorded on the financial books. Likewise, future obligations, such as pensions for government employees, were not fully accounted for until the payments were actually made. This created a situation where the government's financial statements did not reflect its true economic reality. Recognizing this gap was the first critical step towards much-needed reform in public financial management. The decision to move towards Ipsas was a strategic one for Pakistan, driven by a desire for greater fiscal discipline and international credibility. The old cash-based system was simply not enough to manage a modern, complex economy effectively. International partners and lending institutions like the World Bank and the IMF also encourage the adoption of these global standards as a condition for support, because it provides them with reliable financial data. Therefore, the shift is not just about better bookkeeping. It is about strengthening the country's economic governance, improving its creditworthiness, and aligning its public financial management with the best practices followed across the globe. This monumental transformation is being spearheaded by key institutions within the Pakistani government. The Office of the Auditor General of Pakistan has been a primary driver, understanding that meaningful audits require high-quality financial statements. Alongside them, the Ministry of Finance is providing the necessary policy direction and support for this nationwide initiative. To manage the technical aspects of this change, the Public Sector Accounting Standards Board of Pakistan was established. This board is tasked with the critical job of adapting and implementing Ipsas within the local context, ensuring that the new rules are practical and relevant for Pakistan's unique public sector environment. The journey formally began around 2017, marking a clear turning point in Pakistan's public financial management history. The goal was ambitious but clear: to transition the entire public sector, from the federal level down to provincial and local governments, from a cash-based system to a full accrual-based accounting framework compliant with Ipsas. This move represents a deep commitment to changing not just the accounting rules, but the very culture of financial management within the government. It is a long-term project that requires sustained effort, political will, and collaboration among all levels of the public administration to succeed in its ultimate objective. Pakistan has made commendable progress on its path to adopting Ipsas. One of the most significant steps has been the focus on building human capacity. Recognizing that new standards require new skills, extensive training programs have been rolled out for public sector accountants and auditors across the country. These programs are designed to equip financial professionals with the knowledge of accrual accounting principles and the specific requirements of Ipsas. Furthermore, some pioneering government departments have already started preparing their financial statements in alignment with Ipsas 1, serving as pilot cases and valuable learning experiences for the wider rollout of these important new standards. Recent international developments in accounting standards also have a direct impact on Pakistan's implementation journey. For example, in May 2023, the International Board issued new standards like Ipsas 45 for property, plant, and equipment, and Ipsas 46 on measurement. These are particularly relevant for Pakistan, which manages vast infrastructure and heritage assets. These new rules provide better guidance on how to value things like ancient forts, major highways, and large-scale irrigation systems. As Pakistan moves forward, it will need to incorporate these updated international pronouncements into its own national standards to remain fully compliant and to benefit from the latest global best practices. However, the path to full implementation is not without its challenges. A major hurdle is the significant shortage of personnel with the required technical expertise in accrual accounting. While training is underway, building a large enough pool of skilled accountants will take time and continuous investment. There can also be resistance to change from within government departments that are accustomed to the old ways of doing things. Overcoming this inertia requires strong leadership and clear communication about the long-term benefits of the new system, showing how it will ultimately make their work more meaningful and impactful for the country. Another critical challenge lies in the technological and legal infrastructure. The shift to accrual accounting requires sophisticated IT systems that can handle more complex financial data and reporting requirements. Many existing government systems need to be upgraded or replaced entirely, which is a costly and time-consuming process. Additionally, legal and regulatory frameworks must be updated to mandate and support the new accounting standards. This involves amending laws and regulations to ensure that all public sector entities are legally required to comply with Ipsas, thereby creating a solid foundation for this transformative reform to be successful and sustainable. The ultimate goal of adopting Ipsas 1 is to build a future for Pakistan's public finances that is founded on transparency and accountability. When financial statements are clear, comprehensive, and based on globally accepted rules, they become powerful tools for public scrutiny. Citizens, civil society organizations, and the media will be able to see exactly what the government owns, what it owes, and how it is spending taxpayer money. This level of openness helps to reduce the opportunities for mismanagement and corruption, as decisions and their financial consequences are laid bare for everyone to examine and question. It fundamentally changes the relationship between the state and its citizens. This enhanced transparency directly leads to better and more informed decision-making by policymakers. With a full picture of the nation's financial health, leaders can plan more effectively for the long term. They can make smarter choices about investments in infrastructure, healthcare, and education because they will have a clear understanding of the full costs and future obligations associated with these projects. For instance, when building a new hospital, the government will not only account for the construction cost, but also the long-term expenses of maintaining it and paying its staff, leading to more sustainable and responsible public spending over time. Furthermore, adopting a uniform set of high-quality accounting standards greatly improves the comparability of financial information. It will become possible to compare the financial performance of different government ministries, provincial governments, and public sector corporations on a like-for-like basis. This allows for benchmarking and the identification of best practices, creating healthy competition to improve efficiency and effectiveness across the entire public sector. It also makes Pakistan's financial data more comparable with that of other countries, which can boost investor confidence and improve the country's standing in the international community, opening doors to new opportunities. In conclusion, the journey towards full Ipsas 1 implementation is a marathon, not a sprint. It is a challenging but essential reform for Pakistan. By embracing these international standards, the nation is laying the groundwork for a new era of public financial management. This new era promises to be defined by greater accountability, improved efficiency, and more strategic use of public resources. Ultimately, this transformation is about strengthening the social contract and building greater public trust. When people have faith that their money is being managed wisely and transparently, it strengthens the foundations of the entire nation and paves the way for a more prosperous and stable future.